What's up everybody, welcome back to my YouTube channel. Thank you for tuning in, and in today's video we're going to be talking about the market crash, the real estate market crash. It's becoming obvious to everybody that we are headed towards a market correction, and people are freaking out about it. For the past 2 years we have been seeing an insanely hot housing market across the country, and now we are seeing the effects of what pumped the housing market so high, and now it's causing the market to cool. So in today's video, we are going to be covering all of that, all the data behind what's happening in the market, so make sure you stick around to the end of the video. Also, if you're not already subscribed, make sure you go down below, hit the red button, and subscribe to the channel. It helps me reach more people, so I'd really appreciate it if you do so. But other than that, let's get right into the video. So that's right, for the past 2 years we have seen an insanely hot housing market across the country, where supply has not been able to keep up with demand. More demand than supply in any asset class causes prices to rise, and that's why we have seen record-breaking housing prices across the country. We are now in a really fragile real estate market, and this was due to COVID and all the stimulus, free money that was pumped into the economy and the interest rates raising so quickly by the Fed. And now there is no denying the fact and not seeing that we are headed for a major correction in the real estate market. There's a lot of people out there that are in denial of this, but when you look at the data, when you look at the facts, and when you look at what's just going on in the world, we are definitely headed for a real estate market correction. Now that being said, I want to share with you the data that I have collected and the research that I've done about the real estate market that we are currently in and the past years of the real estate market with you, so that way you have a better idea of what's going on. Myself, I've been in real estate for the past 4 years. I started when I was 16. I'm 20 years old now, and I've built a multi-million-dollar wholesaling real estate company, and I'm in the market every single day doing deals, so I have a pretty good understanding of what's going on. That being said, I want to share this information with you so that way you are educated on what's going on in the real estate market, so that way you can invest properly and invest educatedly, right? And I also recommend that you keep updated on the data as well and do research as well, so that way you can stay posted on what's happening. Now let's get into the exact factors that are affecting the market. What things are really, impacting the market and making these changes and these waves that we are seeing. First off, it's the interest rates spiking, right? The mortgage interest rates are spiking. They're going through the roof, right? And this is due to the Fed rapidly raising interest rates. The Fed started raising interest rates at a 1/4 point, then they went to a 1/2 point, which was crazy, and now they're at 75% of a point is what they're raising it by. Now, why is the Fed raising interest rates so rapidly? You may think, oh my gosh, the Fed is crazy, they're going to crash the economy. But the reason they're raising these interest rates extremely fast is to avoid stagflation. Stagflation is a factor that causes a recession to last much longer, right? And if they want to shorten the recession, they need to act rapidly. They need to raise rates fast, right? And if they do it too slow, they could cause stagflation. So that's why the Fed is raising rates so rapidly. Now, what is the main effect on the market of rates raising? This pushes so many buyers out of the market. This is why it pushes so many buyers out of the market. Let's say you were approved for a $450,000 loan at a 4% interest rate. Well, now that interest rates have spiked, your buying power just decreased to around $300,000, right? Because you can't afford the mortgage payment on a $450,000 house now at that interest rate. So now you have to go down to like a $300,000 house. So now there probably isn't houses that you like in that range, in that price range. And if you're in a market like mine, Phoenix, Arizona, the average home price is $450,000. So with interest rates spiking, you pretty much got pushed out of the market. Say goodbye to house hunting because you can't afford it anymore. And so we have seen that push so many buyers out of the market. What does this do? This reduces demand, right? This reduces demand and raises inventory. So now the buyers that are left in the market, they get to be way more picky because there's less competition, right? It's no more a frenzy over a house anymore. It's no more, oh, we're going to offer $20,000 over asking price in order to get the deal. No. The home buyers that are left in the market get to be picky now. They don't have to buy houses that back to main roads or are on main roads, have power lines, none of that. there's a lot more options for the buyers that are left in the market to pick from. And so that's why we're seeing houses sit on the market for longer. We're seeing the average days on market raise across the country. And it's because so many buyers got pushed out of the market by the Fed raising rates. So out of everything, I believe that is the number one factor, the rates raising, buyers getting pushed out of the market. That is the number one factor why we are seeing the real estate market cool, and I don't see anything changing with that in the near future. I see the Fed continuing to raise rates. It's what they have to do. Zillow and Redfin are showing that interest rates on mortgages are up 40 to 50% in just the last year. That is not sustainable at all for mortgage rates to spike like that. Now the next thing is, in 2008, it took about 4 years of different factors affecting the economy to cause a real estate market crash. Now what we are seeing with all the stimulus pumped into the economy, all the things that happened with COVID over the last 2 years, we are seeing just 2 years create the opportunity for a market crash. And in 2008, it took 4 years to build up to that, and now we are seeing it happen in just 2 years. This is a scary sign, right? This is scary because that means that because it took so little time to create the crash might happen rapidly, right? If it took barely any time to create the crash, it may take barely any time for us to see prices decrease rapidly. Now let's talk about new construction, new build sales. New build sales apparently have dropped by 26%. Redfin is saying that they have been selling 26% less new construction homes. So that's another factor right there that is affecting the new construction market, that part of the real estate market, right? There's a lot of different avenues and a lot of different ways to skin the cat in real estate. And so there's a factor right there that new builds are not selling, right? And so I believe that we are going to see new build homes offering tons of incentives, right? We're going to see the builders offering massive incentives, massive decreases in order to get people to buy their properties. The reason they're going to be offering all those incentives to buyers to buy those new builds is because they cannot stand this lack of demand and lack of sales. It's not sustainable for them, for their company, and they can't just keep building like this if nobody's buying. So they're going to be offering massive incentives for new builds, and that may be a great opportunity for you in the near future. Another thing is, we are going into summer, right? And that's usually when the real estate market picks up. More sales, more people selling their properties, more people buying, more people moving around, right? In the summer, the real estate market usually picks up. So it's very, very concerning that when we are going into the good time of the real estate market, that we are actually seeing it cool. It should be the opposite. So that's a major red flag. Now, like I mentioned earlier, the average days on market that a property is sitting active on the market to sell have been rising across the country, right? It's taking homeowners longer to sell their properties on the market. And now what this has done is this has caused 1 in 5 homeowners to drop their price, to lower their price on the market, right? 1 in 5 homeowners have lowered their price. It is so crazy that people are now all of a sudden lowering their prices when a few months ago people were paying $20,000, $40,000 over asking price just to be able to buy the property, right? It was a frenzy. The housing market was on fire, and now we're seeing prices drop on the market. It's crazy. Sellers are in denial about the changes in the market, right? You can ask people in your neighborhood, right? And they may be trying to sell their house, and what they'll say is, I don't know why my house isn't selling, right? It's listed for $1 million. The neighbor 2 streets down sold 2 months ago for $1 million. Why is my house not selling? Well, 2 months ago is very different from now, right? All of a sudden, we have seen these changes happen in the market, and the sad truth is you're just not going to be able to get the price that you were able to get 2 months ago. And this happened very abruptly. So, a lot of sellers are going to have to face the facts and face the music, right? And listen to it, right? Because look what's happening, right? They're just not going to be able to get the price that a neighbor was able to get 2 months ago. They are going to have to lower their price in order to be competitive in this market and get their property sold. And that is just the truth. So we probably will also see sellers just say, hey, I'm going to stick around in my house if I can't get the price that I want. But we're also going to be seeing a lot of sellers flood to the market. They're going to be selling their properties and trying to get them sold as quickly as possible because a lot of sellers know we're in the opportunity of a lifetime right now and it's curving off, right? We are at record-breaking housing prices, and this is the time to sell and profit off the equity in your home. And if they miss the opportunity, it's going to be gone for a while, right? For many, many years till prices get back up to this point. So they need to sell now if they want to capture their equity, and so we're going to be seeing a lot of sellers flood to the market to do that. And inventory on the market has been steadily rising for the past 5 months, right? There's been more homes on the market sitting there, and it's just been rapidly rising over the past 5 months. Nothing too crazy, but we're seeing it happen. The data doesn't lie. There is more properties on the market. I'll pop the numbers up right now. As you can see, it's been going up every single month. So those were some major signs and data that we are seeing in the real estate market that is showing us that we're headed towards a major correction. But now let's talk about quickly the difference between what we're seeing now and what happened in 2007, 2008, when the last real estate market crash happened. So here's some data that I want you to think about. Between 2000 and 2008, 14.6 million new houses were built. And between 2010 and 2019, only roughly 6 million houses were built. So as you can see, there was a lot less houses built, creating less inventory, and that helped our market stay strong and prices rise because we had so much less inventory of new builds, right? There was just way less new houses out there. This is just one of those major pieces of data that shows you a major difference between the situation back then and now. One of the main factors back in 2008 that caused the crash was lenders were giving out bogus mortgages, right? Homeowners were buying way more house than what they could afford, and they were over their head. Fortunately, currently, and in our current situation, lenders have tightened up drastically. They are not giving out a bunch of those crappy loans, and so we are in a better position on that front. And because of those bogus loans in 2008, a bunch of homeowners were underwater in their property. They owed way more than what their property was worth after prices plummeted, right? Prices plummeted, their mortgage was for $400,000 and now their property was worth $200,000. They were way underwater. And now, even if prices plummet, we are in a way better situation because we are seeing record-breaking high housing prices. Therefore, homeowners have way more equity in their property, right? Their property is worth way more than what they owe. So they have a cushion if prices drop to not be underwater in their property. So we are in a way better situation with debt, with the debt ratio and property value and equity to debt, right? In this time around. So we're going to see something way different than what happened in 2008. And in 2008, there was 3.7 million houses active for sale on the market. And currently, we only have roughly about 500,000 houses for sale on the market nationwide. So that is another major data factor right there that shows us the drastic difference between what we're in right now compared to 2008. So I truly believe we're going to see something completely different. But that being said, because it's so different, we don't necessarily know what to expect. The reality is that home prices can't stay this high forever, but that doesn't mean properties are about to shed value, right, in an extreme degree either. Thankfully, we're in a very different place than we were back in 2008, and that means fewer people are likely to get hurt, even if the housing market conditions do take a turn for the worse. That being said, do not stress out too much about the market. We are in a great time where plenty of amazing opportunities are about to arise, right? In a recession, in a real estate market downturn, it is the time to get good deals. You're going to be able to buy properties 40, 50, 60 cents on the dollar and score huge deals. This is when you create wealth. You buy these properties at a massive discount, at a massive deal. You hold on to them. Once we go through that cyclical cycle of the market, they appreciate again in value, and now you are sitting on a ton of equity, and that is how you truly create wealth. So as long as you are watching the market and you are learning about real estate and becoming an experienced investor, and you know how to analyze deals and pull the trigger on a deal when it's right, you will be successful in this economy. You will be successful in any economy in the real estate space. So make sure you stay focused on the good deals, how to analyze them, and learn about the market so that way you can be proactive rather than reactive and make sure you succeed in this market. That being said, I hope you all enjoyed this video. I gave you all the information you needed to know about the current market status. and I hope it was helpful to you. So if it was, make sure to go down below, hit the red button, and subscribe to the channel. Also, make sure to like the video. It helps me reach more people, so that way more people get the information that they need. But other than that, I'll see you guys on the next video. Thank you so much for watching. Peace.